Good morning. Today is Monday, January the 16th. The time right now in Singapore is 11:17 in the morning, and we are getting close to midday. And overnight not overnight, on last Friday, Wall Street actually continued extending its gain from the result of the CPI release, which is generally showing that the US inflation situation is getting better. The market at the highest recorded CPI numbers in the States was last June at 9.1%. The latest number shows that inflation has come down to 6.5%. So this is a very far cry from where it was 6 months ago. So generally speaking, even the core CPI has eased off a little bit, although the services inflation has actually notched up a little bit, but the market was in a buoyant mood, so the market will basically ignore or whatever negative news there is and decided to take the market higher. So this is where we are right now. On the Dow Jones itself, you can see the market actually traded to the month high of 34,342, which is the highest. And we are not that far away from last month high of 34,712, and also not far away from my immediate target of 34,842.9. So this is referring to the cash index based on the daily, based on the 4 hours time frame that you are seeing right now. So this general buoyancy, optimism in among market participants may extend for a little while longer. Obviously today we're going to have a US holiday because US is observing the Martin Luther King Jr. birthday. So US markets will be closed tonight. So do take note of that. And this, like I said, the general buoyancy, the general optimism in among market participants taking risky assets, in particularly US equity to its highest level this month. We have seen the start of a very strong year, but over the last 2 weeks, we can see US equity has actually gone up quite a fair bit, and we are already seeing perhaps a challenge of the last December high. In the Dow Jones, the high is 34,712. So is there a possibility that the market may challenge this level? We have about 2 weeks before the month end, so anything can happen. It's not that far away by comparison from where it needs to be, from where it is right now. So I will not dismiss the possibility of a challenge beyond last month's high, maybe even to exceed those levels. But for the market to actually maintain its upward continuous direction, now I have my doubts here. Okay, I think the danger period for me personally is in the next Monday, which is January 23rd onwards. Okay, so from that day onwards, I am going to be very cautious. I'm not going to hold any long position over the weekend, especially as this week ends. Okay, so anything could happen because a lot of things is actually in the mix. Not only are we going to be concerned with the economic outlooks, we also have to contend with the reopening of China, which theoretically can actually reignite inflation in the States, because when China come back in again, they reopen their borders, their factory is going to be humming along. China will definitely need more energy imports, and this could actually underpin energy prices, because the two major component in the CPI as far as the US is concerned is energy prices and food prices. Food prices has not come down significantly in any way. In fact, it has not come down at all. Whereas the one thing that was actually very obvious was the fall in energy prices, in particularly natural gas, and that has bring down the entire CPI numbers. With China coming back in again after they go back to some kind of normalcy, and if factories are humming along, they definitely will require more energy imports, and this could actually cause energy prices to go up. In fact, we have already seen crude oil prices bottoming out at $70 just the week before, and now it is this morning is already at above $80 per barrel. So you can see the impact of China reopening could be a negative as far as the fight against inflation is concerned. So do not pop that champagne too soon, because I always believe, despite the analysts talking about this year, we are going to be more concerned about recession, because I think we have win the fight against inflation. So don't be too optimistic, because I think inflation is going to be reversed for a long time. It is highly unlikely to be able to brought down to 2% as what the Federal Reserve Chairman said he wants to see. Okay. And then, of course, on top of that, we're going to have slower economic growth. The World Bank and the IMF has already warned us that the global recession looks like it's going to dip into a recession. So we're going to have lower economic growth, and then we're also going to have continued very stubborn prices at the retail level. That means that we are going to see not only a recession, we're going to see a stagflation, which is going to be even more problematic as we get into 2023. Okay, so again, my long-term prospect for this is that I do expect a very sharp pullback anytime soon. So I'm not likely to buy up this particular optimism that we see in on Wall Street right now. Over in S&P 500, we also see the same thing. Prices have gone above 4,000 points, which was a much analyzed level in which people believe that if the S&P 500 cannot go beyond 4,000, then it is very vulnerable. Now the market has already surpassed that and stay above 4,000. So again, these people will be using this as another evidence that the bottom in the US equity market is already in place as of last October. Okay, so we'll have to see. Okay, but from where it is right now to challenge the December high, we still have about 90 odd points more to go. Okay, by comparison, this is not as near as what we as we can see basis the Dow Jones index. Okay, so you will have to catch up quite a fair bit before you can even challenge the December high. Now over the Nasdaq 100, this is by far the weakest link. We can see that the Nasdaq itself, this is the Nasdaq 100 by the way, is at 11,547 as of Friday. So we can see that it is very far away from where it need to be, which is to take out the last month high at 12,166. Okay, so if we are only just beyond the approaching the 61.8% retracements of this entire pullback here, so we have to see whether it have enough momentum to go even higher. Now the same cannot be said about Asia. Over here this morning we can see the Hang Seng Index has opened with a gusto. It is already trading just under the 22,000 level, which is not far from my target of 22,118, and definitely not very far away from the last June high of 22,449. So we can see the mood in Hong Kong is actually very optimistic. If the US players are very optimistic about it, about US equity, but I think the people in Hong Kong, after being battered down for so long, even way before the pandemic hit, now they can see some light at the end of the tunnel with the reopening of the borders between China and Hong Kong. So this is actually underpinning the bullishness that we are seeing of late in the Hang Seng market. So this bullishness should maintain for a little while longer. Okay, over in the Shanghai Composite, we see a major run up this morning. Market actually is trading higher. Currently the high is at 33,244. So it is actually very, very buoyant right now. It is more like a Johnny come lately playing catch up with the Hang Seng Index, because we can see that over the last couple of weeks, it has been playing second fiddle to the Hang Seng. Now it has taken up the December high. Now it's obviously going and gunning for the September high, and even maybe to overtake the August high at 3,308. Now, if the market can actually take out the 3,308.35, then the market will have gone into a very different phase. It will have gone into a very bullish phase as far as the daily time frame is concerned. So this one has among one of the few candidates to actually flip into a bull market instead of a bear market. Okay, then the Nikkei on the other hand is another different story altogether, because this week we're going to see the Bank of Japan going to decide on their interest rate decision. No change is likely to happen, but of course there is the slight possibility the outgoing governor of the Bank of Japan, who is going to step down in April, may actually want to normalize its monetary policy, because Garuda is his legacy is negative interest rates. So negative interest rate is definitely something that is out of fashion right now, where the rest of the G7 economies has actually been aggressively hiking rates. Japan is the only G7 nation that is still maintaining a negative interest rate. Currently, the Japanese interest rate is negative 0.1. So maybe before he stepped down, Garuda may actually want to normalize that to bring it back to maybe 0. Okay, but the market is more optimistic than that. Okay, the market right now is actually thinking that maybe Japanese interest rate may start to go up. On the one hand, the fact is that Japan cannot afford higher interest rate because they have enormous national debt at 240% relative to the GDP. So they can't afford higher interest rate, but the market is thinking otherwise, because the interest rate differential between the Japan and, let's say for example, the US is widening, maintaining at a current negative 0.1 relative to US interest rate at 4.5. This is definitely unsustainable in the long run. So we can see there's a massive outflow of capital out of Japan, seeking higher yields elsewhere, especially in the US. So the market believes that interest rate have to go up in Japan. That's why it is a negative for the Nikkei 225. You can see Nikkei is actually coming back down and is already testing the month low. We have 2 more weeks to go before the month end. I think this momentum here do suggest that over time, the June low that we saw at 25,630 may actually be broken to the downside. Okay, so do watch out for this negative outlook for the Nikkei 225. Now, because of the idea that the BOJ may hike interest rate, you can see the yen is getting very, very strong. As of this morning, it's already trading at 127.20. So we can see that the dollar versus the yen, the dollar is falling and the yen is gaining strength, very different from what we saw in September of last year, where the dollar was strong and the yen was weak. So we can see that the dollar versus the yen now is in a different phase. It is in a bear market for now, and if this continues, there is a possibility the market may actually advance towards 123.5. Okay, so this is my target here. 123.35 is my immediate target for this move here. Okay, over in the euro versus the dollar, as the dollar retreats, we can see all other major currencies started to rebound. So far, the euro versus the dollar went up to a high this morning of 108.74. But we have to be very careful about euro strength. It's just not so much of the strength of the euro, it is the weakness of the dollar that saw all the other major currencies having surged so far. Okay, so I do not for a minute believe that it is due to the strength in the euro. In fact, this currency is fundamentally very weak. I'm just going to see how far it can go before it starts to lose momentum. The moment it shows signs of losing the momentum and give me a sell signal, I would definitely want to sell this currency pair and want to hold it for the medium to long term. Okay, over in the sterling, we can see the same thing. Sterling managed to go up to 122.89 this morning, and it is at one stage managed to climb beyond the midpoint of this rising channel here. But so far as the closing price is concerned, it has not succeeded in crossing over this midpoint. So we have to continue to watch if it can actually close beyond the midpoint. Because if it can, because this midpoint, it does appears to me that it is acting like a resistance right now. Okay, so far the signs are quite good because it attempted once. Let's see whether in London later on, when the London market opens, we can see buyer coming back or not. If it does, then maybe if it can stay beyond this midpoint of this rising channel, it has technically a better chance of sustaining its upward momentum. Okay, over in dollar versus Canadian, you can see dollar weakness is quite evident. On Friday, the market went up to 133.21, and then it has a counter trend rally. And this morning, it seems that it's losing that momentum, and it's probably going to test the downside. So as far as the dollar concerned, for a time being, dollar is under defense. It is trying to make sure that it doesn't lose too much ground. I think this critical point here will be here at 133.16. Okay, so if the market go and take out this one, I think the immediate target for me will be 132. Okay, 132 is a very nice and round number. Perhaps this is where it is heading to. Okay, over in crude oil, we can see that crude oil prices has already bounced up from $72 to $80 per barrel this morning, and it does look like it's quite sustainable. Okay, so I do believe it is likely to be a case whereby I think we can see a 3-wave rally. If this is the case, maybe the market will go to this level here. Okay, somewhere between $83.87 to $86.97. So upside, there's still definitely some potential in which you can gun for. Over in precious metal, we can see gold is on a tear. This morning it went up to $1,929 almost. Okay, and it is quite a pity because I have no long position, although I saw the move coming. So in the meantime, I just have to watch, and hopefully the market can do a decent pullback for me to buy at a more realistic level. At this current level, I'm definitely not. I don't have the stomach to chase it. Okay, same thing happening in silver. Silver is joining come lately because over the last week we can see silver underperforming gold, but we can see now this is not the case. On Friday, gold prices actually caught up with gold market. So silver prices right now is $24.51, very, very close to the month high at $24.55. So there's every possibility this rising channel will be able to guide the price forward to the upside. Okay, over in cryptocurrency, we see a massive run up in prices over the weekend. On Saturday, Bitcoin actually took up 21,000. This morning it went even further, 21,434, although it did not have a new high on Sunday itself, but this morning. As of now, the high traded 21,434 appears to support the idea that maybe a low could be in place at 16,285 in December. Okay, so this idea of buoyancy could be attributed to the general mood by market participants thinking that the Federal Reserve may actually ease off the interest rate hike and maybe even pivot, that means cut interest rate. And I'm of the opinion that this optimism is probably misplaced, because nowhere in the language of the Federal Reserve has he told us that he's going to cut rates. So we all understand, as the Federal Reserve start to hike rates, that's where cryptocurrencies went into a winter, deep winter. Now we are beginning to see signs that the fight against inflation, at least based on the official numbers that have been released in the CPI, suggests that maybe the fight against inflation may be over. But I like to caution, it's a little bit too early to pop the champagne. I do not believe for a minute that the fight against inflation is over. It's going to come rolling back again, not necessarily based on economic numbers, but it could be due to other factors. Okay. Earlier on, I did mention the China reopening could be inflationary by nature. So we do not, I do not subscribe to the idea that we have already defeated inflation. Then, of course, if that's the case, if interest rate is going to remain high, then what we see of late in the crypto space in terms of this surge in prices may not be able to be sustainable over the long term. So we have to be very careful about this move here. Now, Ethereum also have a bump up to almost $1,600, and this was on Friday, on Saturday. So far this morning we do not have a new high, so we have to see how it's going to perform. Now we can see I have a series of support line. Each one is steeper than the next. Okay, you see the nearest inner, what we call inner support line, is so steep, it's probably about 20 degrees. Such a gradient is definitely not stable. Okay, the most stable one are the 45 degrees. Okay, so those are the more stable support and resistance line, but this one is definitely unstable. So if the market takes out this line here, I won't jump into conclusion saying the market is coming back down. So we have to watch this move. Okay, over in Ripple did not manage a new high, but it actually managed to go up to 41 cents on Saturday. This morning, we can see a bit of a run up to challenge this 41 cents level. So again, until there's a resolution between the SEC and Ripple Lab, the potential for higher prices is going to be quite limited. However, if the verdict comes out and the judge said, okay, the SEC has no case, then it will positively impact the price of this particular token here. Okay, so in Solana, we can see Solana is also doing, no, this is Dogecoin. I don't want to see, I want to show you Cardano. Okay, Cardano prices is actually very firm. You can see the run up in its prices does appear to suggest that the bottom may be already in place at 24 cents. Currently, the market high on Saturday was 37 cents, and right now it's about 36 cents. So basically, I think you can see the structure has been very, very firm. I do hope the market can actually pull back, to somewhere around 31 cents. If that can be done, then of course this will be a fantastic level to pick up some more long position. Okay. In Solana, we are also seeing very, very robust run-up in prices from the low in December at just under $8. Now the price is just above $25 on Sunday. Now, on Sunday, no other coins has managed to do a new high relative to Saturday, but Solana did. Okay. However, Solana did not have a high this morning, unlike Bitcoin and Ethereum. So again, there is a bit of a trade-off here, but generally speaking, you can see the pullback has been very, very shallow. So this market remains very well beat, and is highly unlikely to pull back significantly unless there's a change in some kind of fundamentals. Okay, this is all I have for you for today. Now remember, tonight US is holiday. There's no market open for United States, so the next update will not talk about the US equity market because they are not open. So I will see you tomorrow morning. Okay, bye bye and take care. Be safe.